Alrighty, hello and welcome everybody. Today in this video, we're going to walk through a real world example of generating a systematic trading signal. We're going to use a Python script here in Google Colab to kind of perform this little technical analysis on Apple is kind of what we've chosen for the stock here. And most importantly, we're going to kind of interpret the data that it's going to be outputting to make a data-driven decision. So the goal isn't just to run the code here, but kind of like we've done in the past, understand the story of what the data is going to tell us, especially when we're encountering like conflicting signals and stuff like that. So kind of analyze the trends, momentum, potential value to kind of generate a final confidence score. And then we're going to kind of determine a proper position size based on the risk that we kind of see from our data. So let's kind of look kind of through everything. So we've got kind of a few different sections here. So the first two sections here in the code are going to be more of the configuration, like the setup kind of sections. So we're going to import our libraries like we have up here, Y Finance, and the two others right here. And we're going to kind of configure our our key parameters as well. The ticker AAPL, which like I said is related to Apple. The date range, a sample kind of account of $100,000 and a 1% risk per trade percentage. And then kind of section 3 is kind of where we're going to get our data to kind of look off of. So it's going to be calling the Yahoo Finance API to download all the historical price data for Apple within our specified our date range. And then onto section 4, where we're going to kind of have the core calculation engine here. Excuse me. And so we're going to compute our 3 key indicators. So the 50-day and 200-day simple moving averages to define the primary trend here. The MACD, the moving average convergence divergence to measure momentum. And then the overbought oversold, so like the relative strength index or RSI. So those are going to be our data indicators. And section 5 is going to be generating our signals. So we're kind of just going to apply a simple set of rules to each indicator and assign a score. So the trend gets a heavier weight of like +2 or -2 because of it being the most important factor. And then we can kind of sum these up to get our total confidence score. So now we can run the script and analyze the output, which is, like I said initially, is going to be the most important part of this process. So we are going to be able to go down and kind of see the indicator signals. Let's see, let's go down here. And so the trend SMA, actually we'll go back up here. The trend SMA is bullish, golden cross with a score of +2. So this is a strong positive sign. And it tells us the 50-day moving average is above the 200-day average, meaning the long-term structure of the market for Apple is indeed positive. And then, however, the MACD is negative with a score of -1. And this is our conflicting signal. It means that despite the strong underlying trend, the short-term momentum has recently shifted downwards, and the MACD line has crossed below its signal line, suggesting kind of a pullback or consolidation phase. And then lastly, the RSI is neutral with a score of 0. This tells us the stock is neither overbought or oversold. It's neither one, so it doesn't give us really a strong signal in either direction. So that kind of brings us to the confidence score, and which is it's +1. So that's going to be able to tell us that it's not really a strong buy signal. +3 or +4 would definitely be like okay, we'll go ahead and do that. But +1 kind of tells us to be cautious. The bullish long-term trend is being challenged by weak short-term momentum. So a good interpretation would be to kind of hold existing long positions, but to wait for momentum to turn positive again before entering a new trade. So we'll kind of see that based on the cautious but slightly bullish signal. Let's say we decide to take a trade. We'll kind of look at the risk in position sizing recommendation. So with like I said initially, $100,000 account and risking 1% or maximum loss is capped at $1,000. So the script kind of uses the entry price of $245.27, and it sets like a sample stop loss 5% low that at $233 roughly, and the difference is about $12.26 of risk per share. So we'll kind of see that down here. And then to stay within our $1,000 risk limit, the script calculates that we put into Collab here that a recommended position size of 81.54 shares is kind of recommended. It kind of ensures that even if we're wrong and the trade hits our stop loss, the financial impact is controlled and aligns with our strategy, so we're not losing too badly. And kind of just so overall, kind of to recap everything, Collab just kind of told us that our script doesn't necessarily give us a simple buy or sell. It's kind of neutral, but it kind of provided a detailed analysis of kind of where we're at. And we kind of just identified through this a strong underlying uptrend, but also noted weakening short-term momentum, which kind of obviously related into that final score, confidence score of 1. So this is a perfect example of how a systematic approach helps manage conflicting signals and leads to more intelligent trading decisions overall. And finally, we kind of translated this signal into precise position size to kind of ensure the trade is managed with proper risk controls like we talked about at the end. So this entire process from data fetching to the final recommendation kind of gives us complete and like actionable trading plan. So thank you guys for joining, and we'll see you again soon.